Okay, video 2, this is about profit and loss. So first thing I'm going to talk about with profit and loss is the structure it always goes in. And actually, I mean, you're lucky at GCSE, you don't need to know this in that much detail, but it is so easy, a profit and loss. All it shows simply is whether a business is making a profit or a loss. So a profit and loss always follows the same structure, always. It starts off with something they'll call turnover. If they don't call it turnover, they might call it revenue. And that's the first thing they'll show. Turnover. I can't spell revenue. This is a disaster. Don't go away. Don't go anywhere. Let's start again. Can I spell revenue? Revenue. Boom. Just made it happen. Okay. So turnover and revenue. We know those both things are money in. Now, I've said it before. If there's one thing my friends who run their own businesses love talking about, they love talking about their turnover, because this is money in before anything's been taken away. So you'll always sound clever when you see turnover. That's the first thing you'll always see on a profit and loss. For example, in this case, the turnover for this company is 1 million. So that is the amount of money they've got. So for this company, we've got 1 million so far. Now, does that mean this company is definitely successful? No, because we haven't talked about any of their costs yet. So with the profit and loss, after you've had your turnover, you then have to go to the next bit. There's only 5 stages to this, so this is the second stage now. After you've got your turnover, you have to take away your first things, which are called cost of sales. Now, they put cost of materials there, but sometimes I'll call them cost of sales. Now, that less just means take it away. So, cost of sales in this case are 300,000. So, have they actually made £1 million? No, because their cost of sales are 300,000. So actually, they've only made, and this is the third stage, they've only made a gross profit of equals 700,000. Now, just quickly, always do a little pound note here. Quickly, cost of sales. An easy way of remembering cost of sales are they're always the, and I'll put it in green so it's easy, cost of sales are always the variable costs. Right, so think of a variable cost. These are costs as you make more of a product, these costs go up. So here it said cost of materials. What would be another variable cost? A thing that, so what else would be a thing that as you make more of a product, you have to pay it more? Cost of materials is an easy one. Other times it might be cost of ingredients. Things like packaging, just anything like that. So in this first question it says select a variable cost from James Engineering Profits and Loss. As you can see, there's only one variable cost in there. So you'd have to write cost of materials. Because you know that first thing that's taken away is always a variable cost. So they always take away variable cost first. Right, so you've got gross profit. Gross profit is just your money in, take away your variable costs. Right? Are you finished yet? No, because you haven't talked about your fixed costs yet. And instead of calling them fixed costs, they call them expenses. So you could, instead of putting expenses there, you could call all these things are fixed costs. And in this case, you'd have to add up all those numbers. Now, at this point, do not even think about being smug. Get your calculator out to see how much number this is. Right, they all add up to, all those numbers up there add up to 500,000. So, I'll put that in here. Their expenses were 500,000. So how much money did they actually get in the end? They started off with £1 million. Then their cost of sales were 300,000. So that was all their variable costs were taken away. Then that meant they ended up with a gross profit of 700,000. Then they take away their expenses, which were 500,000. Remember, that expenses are all fixed costs. So finally, what is going to be their net? Where am I? Their net profit. Their net profit will be only 200 grand. So this is why all my friends always love talking about their turnover. Their turnover is all their money in. So they might have had £1 million in, but in the end they end up with only 200 grand's net profit. Right. Let's go through the questions now. Now I've given you all those numbers. So the numbers just to put in the question marks here are, this would have been 700,000. And their final bit would have been 200,000. And you'll need those numbers later on. Right, explain why your selected item is a variable cost. Now you just got to explain what's going on here. So you'd say a variable cost is what? A cost that changes or varies with output. Now just for saying that you'd probably get the 2 marks, but I'm going to keep on going. Variable cost is a cost that varies with output. Then you say cost of materials is a variable cost because. And it's a variable cost because the more products you need, the more materials you need. So explain that in that gap there. Right, this calculation now scares some people, but it's the exact same calculation every single time, regardless of what paper you're doing. It's always this calculation. They'll always say calculate the net profit as a percentage of turnover, right? So the 2 numbers you need here is you're going to need to know the net profit, and you're also going to need to know the turnover. That's all you're going to need to know, right? So it says net profit as a percentage of turnover. To do that, you put net profit on the top, you put turnover on the bottom, and then always, to get a percentage, you times by 100. I'll explain why companies bother doing this in a minute, but okay, so the net profit was 200 grand, and the turnover was 1 million. Whoops. And if I times that by 100, the number you end up getting is 20%. And you're wondering, what's the point in doing a net profit percentage? But this is actually a really important number. And I'll give you an example of like Man City, right? Man City end up getting like, God knows, like £300 million turnover, money in. But they only ever end up with like £3 million profit, or they'll even make a loss. What does that show you about Man City? It shows they might get loads of money in, but they've got way too many costs. So companies always want to have quite a big net percentage profit, or net profit as a percentage of turnover. 20% is okay, because that's showing that you may got £1 million in, but you still got 20% of that back in the end in the profits. A bad number would be like 3%, and a really good number would be like 80%. Okay, moving on to C. C is a bit irrelevant, but they'll ask this thing quite a lot. C, it will say, explain ways you can measure or not a business is a success. And it's saying apart from profit. So what other things could measure whether a business is a success? I'll go for the easy ones. One is number of employees. In theory, the more employees you've got, the bigger business you've got, so you're more successful. You can also say market share. Now, market share is say for an industry like a supermarket, it's what percentage of the people who go to supermarkets go to your shop. Now, the bigger market share you've got, the better you're going to do. For example, Tesco's got like 29% of the market, so they're doing very well. Another thing you could look at is you could look at someone's balance sheet and see how many assets they've got compared to their liabilities. So there's 3 good things you could do to check whether a company's doing well or not. Number of employees, market share, and check whether their balance sheet is doing well or not. A fourth really easy one is you can look at their share price. Because if a share price is high, like for Apple, they've got a very high share price, that means the company's probably doing well. And when Facebook was struggling a bit ago, it was people were saying, look at their share price keeps on going down. Well, I know if you saw this question, you'd think, oh, good God, this is hard. But it's really, really easy. All they've done is they've given 3 years for profit and loss. They've given 2001, 2002, and 2003. And they're asking you to calculate the net percentage profit for all the years, and say what the fall is between 2001 and 2003. Now, they made it easier. So they've already got you the 2001 net percentage profit, which is 20%. And you can see that here. They've already said the net percentage profit here is 20%. So all you're going to have to do is be able to find out the one for 2003 and find out what the net percentage profit is for 2003. But you're going to have to get some of these question marks sorted already. Okay. So the first number you're going to have to find is total expenses. And to do that, if you actually look at it, it'll be under gross profit, which is there. Gross percentage profit they've done. You don't need to really know that. They've got this number plus this number plus this number plus this number plus this number. If you put all them together, that'll make total expenses. And you can always check whether you're right there by adding these numbers up and seeing whether they add up to that number, which they do. So I'm just going to pause it and make sure you can do that. So that number is 31,000. Where am I? Yeah, 31,000. And you'll know that's right by checking the other ones and seeing if they are similar. Right, the net profit then. So if they had total expenses of 31,000 and they had gross profit of 50,000, that must mean they only made £29,000 worth of net profit, because it would be £5,000 of gross profit, take away all their expenses, and then end up with talking complete rubbish. Right, this is why you must use a calculator and not be like Mr. Robinson. Right, so what's 50,000? Take away 31,000. It is 19,000. Can you imagine writing that wrong in the exam? Okay, so you've got 19,000. You've now got to find net percentage profit. So how do you find that again? You put the net profit, which was 19,000, on top, and then on the bottom you put the in the last example they called it the the revenue. Now that's the exact same thing as sales. So 90,000 with how much is it? It's 19,000 over 100,000 times by 100, and that equals. Let's have a look. I think it's 19%, but I never want to be cocky, so let's try it. It probably isn't 19%. How embarrassing would that be? Okay, 19,000 divided by. Don't go away. Of course, it's 19%. Right. So the answer would be 19%. So what we've got so far is the net profit was 20% before, and now it's gone to 19%. So what's the fall in net percentage profit? The fall is 1%, and that's your final answer. Lots of people will forget to do that final stage. Okay, they now say, referring to the figures, explain why net profit increased between 2002 and 2003. So net profit was 8,000, but then it went up to 19,000. So that's an increase of 11,000. What possible reason can you see here that it increased by so much? Is it because the expenses were less? No. If you look at this, expenses were more. It was 22,000, now they're 31,000. What's the big reason why net profit increased so much? And the reason is because their revenue went up from 80,000 to 100,000. So all you'd have to say, as you can see above, the revenue increased from 80,000 in 2002 to 100,000 in 2003, a 20 grand increase, which is the reason why net profit increased. That's it. All you've got to do is explain that. There you are. Okay, the next bit says, what is meant by the term turnover? Now, you know turnover can also be called revenue, and it also can be basically money in. So turnover is money in from, you could say money in from sales. That's basically all turnover is. It's money a company's getting from their sales. Right. Right, now we've got to do the shaded areas and the profit and loss. So we've done the first part. You're probably getting quite good at these shaded areas because we know there are only 5 stages to a profit and loss. We've got turnover, which is money in. Then you take away cost of sales. So that money, 687 million, 0.5. Then you take away the cost of sales, and that makes gross profit. So all I've typed in is 687.5, take away 597.1. And I get 90.4. Now, that's the first, so I've already got 1 mark. The next thing is, what number must be up here? Take away this amount equals 66.9. So all I do to get that number is I do 543.9 plus 66.9. And that ends up being 610. 0.8. Now, I'm always a bit careful with these things, so I put the number back in to see if I'm right. So I do 610.8, take away 543.9, and the answer should be 66.9, and it is, so I know my answer's right. So already I've got my 4 marks so far. Now again, they've got that calculate the percentage net profit earned. They love this thing. So to get this, you just have to get the net profit on top, and on the bottom goes turnover. So your net profit was, now which year do they want? They want it in for 2007. Don't get that wrong. Read what they want. So it's 71 million 0.8 over 687 7.5. And then because we're looking for a percentage, what do you have to do? You have to times by 100. So let's do that. And that's come out as, let's make sure I've got this right, because it come out as a weird number. Don't go away. So I've done 71.8 divided by 687.5 times by 100. And did you get 10.44? So I'm going to put it as, there's it 10 point, I'm going to go for 2 decimal places just in case, 10.44%. So they've only got a net percentage profit of 10%, which is quite low. Right. Now, the biggest mistake you could make there is you wouldn't have done it for 2007. Make sure you read what the question asks for. Okay, so you know stakeholders are people who have got an interest in the business. Now, I know that this question hasn't asked you what they are, but I still would probably say that at the beginning, just to prove that I know what I'm talking about. So you've got to try and work out 2 stakeholders who'll be interested in the profit and loss, and then you've got to explain why they have an interest. The biggest worry here is lots of people will get 4. So they'll stay a stakeholder, they'll only give like a kind of half-assed reason why they didn't actually care about it. So let's go for it. Stakeholders who might be bothered, I'm going to say for one of them could be a bank who's given them a loan, right? And you could say they're going to be interested because they want to make sure their money is safe. Do you know, they want to make sure that your company's doing well enough so they're going to get their money back. And that's why they're going to be interested in it. Now, just to guarantee the marks, I might say the bit of the thing they're going to be most interested in. So what's the bank going to be most interested in? They're going to be interested in that you're making enough profit to pay your loans. That's all they're going to care about. They don't need you to be making loads of profit. They just want enough so you can actually pay off your loans. So I'll try and explain that. A second one I might try and say is, I'd say suppliers. So why are suppliers going to be interested in it? Because suppliers might have given you a product, and what do they need to make sure? They need to make sure they're going to get paid for their product. A bit ago, all the computer game people wouldn't supply their own games to Game because they didn't trust that Game would give them the money back. So suppliers, they want to make sure they pay for their product, and all they want to be able to see again is that they've got enough money to pay for supplies. Can't spell supplies. Right. Which other stakeholders might be bothered by it? We've got banks so far. We've had suppliers. I'd say employees. Yeah, I'd say employees. They're going to be bothered because they want to make sure that they might. There's not a lot you can say on employees. There's a couple of things they want to make sure. One, they want to make sure that the company's doing well enough so they're not going to lose their job. A second thing you could say for employees they could be saying, well, the company's making so much profit, maybe they should be paying me more. So you could say that. Other stakeholders who might be bothered, you could probably say, always you can say shareholders, because the shareholders might be thinking, if they're making lots of profit, they should be paying me more of a dividend, which is a payment you pay to shareholders when your company's doing well. It's a dividend, sorry. So there's things like that. On to the next question. This is the last one for profit and loss, and it's one I haven't done for years. So it looks a lot like that one we just did a couple of pages back, and I think this is a structure they seem to like lately. They seem to have come up with a couple of ones like this lately. So it's talking about Radsonic, whoever the hell they are, and this must have been last year's paper, or maybe the year before. So there's 3 years again. They've given 3 years of profit and loss, and they've got all those things that they had before where they're going to ask you for net percentage profit. They love this net percentage profit, so we've got to try and do that in a minute. Look, they're going to ask us to do that for 2 marks. But before we do that, we're going to have to calculate the total expenses paid by Radsonic in 2012. Now, before we start, we know expenses are fixed costs, just to help us. We know they're fixed costs. Because sales is, you could argue that's called revenue instead, or turnover, you could call it as well. Right, anyway. So what's their total expenses? Their gross profit was 3 million, and they ended up with net profit of 200,000. So they must have massive expenses, this company. So all you'd have to do is do 3 million. 1, 2, 3, 4. 3 million take away 200,000. And the answer is, I don't know why I need to put that on the calculator, but I did. That is 2.8 million. So, they must have had expenses of 2.8 million, which is a really high amount of expenses. Right, but you know your number's right because 2.8 million looks all right, and if you look at the number next door, it's quite similar. Rather than putting 2.8 million, I would do it as 2.8 and then 5 zeros. Yeah, because if that's how everyone else has done it, I'll do exactly the same. Right, what we're missing now, we need to do the net percentage profit. Now, to do net percentage profit, you have to remember you do net profit on top, which is 150,000, and then on the bottom you do revenue, which is 300,000. Sorry, it's not 300,000, it's 3 million. So, and again, as always, you have to times by 100 to get a percentage. So I'm just going to do that now. I put in, now you really check your zeros here. So it's 150,000 divided by 3 million, so 6 noughts, times by 100. And they've only got a net percentage profit of 5%. So this is a company that started off with revenue of 5 million, but they only ended up with 200,000 net profit, and that's not very good. That means they're not making as much money as maybe they should be. They've probably got way too high costs. And you know that number looks sensible because the other two numbers are quite similar. So you know you can't have gone too far wrong.